Okay, good morning. This is Ryan Sweeney here with your pre-market action, and it's just a beautiful morning because, yesterday I saw a lot of fear, a lot of uncertainty uh, in a lot of different assets, particularly cryptocurrencies. I saw on Twitter everybody getting negative. Well, who would have thought? I was exactly correct on cryptos. They're just in a range right now. Yeah, they were at the bottom of the range, but when they're at a bottom of range, the probability is that they'll stay within that range, so they're probably going to go back up. And we're in a bull market, of course. So Bitcoin making a really really nice rally up to 34,000 this morning. Ethereum back above 2,000. And Ripple, one of my favorites, is up 11% this morning, which is just beautiful at 65 cents. So rally across the board for cryptos, and that is looking beautiful. And of course, I've been talking about the dollar. Dollar's lower again this morning, and it's starting to get back into this downward trend. I think 3 of the last 4 days we've been down, so that's good as well. We have the 10-year yield stable, slightly higher, and it put on a loss yesterday. So it's good to see it rebounding a little bit, but not going up too fast. Money coming out of the debt market and going into other assets. We also have gold and silver slightly higher, although gold up $5. I mean, not big. Silver up almost 0.5%, but crude oil, which put on almost a 1% loss yesterday, up 1%. So I mean, this is par for the course. This is the trend. This is what you bet on, and it's just beautiful. We did get a little bit of economic data this morning. We got the current account deficit, which was minus 196 billion for the first quarter of this year. I mean, think about that. This just popped into my head. In 2008, the TARP program, which we're on the hook for, that bailed out banks, makes sense. That was like under 800 billion, I think it was. And in the first quarter of just this year, we have a current account deficit, which means that we're spending more than we have, of almost $200 billion. So in 1 year, just the current account deficit, not counting government deficits or whatever, is 196 billion. And that would be more than the entire TARP program in every single year. Like the 2008 was supposed to be a one-time thing. No. The 2008 crisis was just the beginning. Okay, the COVID crisis was another part of it, but that was only just the beginning too. I mean, the final event here is going to be so massive and so unprecedented that people don't understand. And why is it going to be so massive and unprecedented? Because all the monetary policy right now, all the action being taken by those people at the top on every single level is so high and so intense that it's like a drug. You shoot up, you shoot up, you shoot up. You need more and more, and eventually the withdrawal is just going to be that much worse. So that's that. Other than that, we got some economic data coming out at 9:45 that will be a market mover. We have market manufacturing and services, which is the flash number for June. So watch that. And we get new home sales. And we had existing home sales yesterday, which prices were at record, but there was a drop of 1% almost. So we'll see what happens with new home sales, but that might affect the market as well. But we have FedGov Michelle Bowman speaking on community development. I don't know if that'll move the market. Probably not. Given the amount of Fed talk that we got yesterday, I think that Fed talk is moving over in today and pushing down the dollar, pushing up all the other assets. It's a nice Wednesday, middle of the week. Let's relax into this one, and everything we're doing is right on trend. So not worried about a thing. And I will see you at the end of the day. Hit the like button, hit the subscribe button. Thanks for watching.